Welcome to this week's Real Estate Q&A, where I cover 5 of the top comments on our channel over the last week. Also in this video, I'm going to discuss some of the problems that many new home buyers are now facing since buying into the lure of purchasing a brand new home. As we've been hearing in the news just how wonderful these new home builders are for providing us with some of the only housing inventory available for purchase in the U.S. However, now burdened first-time homeowners who stretch their finances to buy at the highest prices we've ever seen before are finding themselves remorseful and falling into financial hardship as their monthly housing costs are rising. Now, these first-time buyers thought they had a fixed monthly payment, and they justified their decision to buy new construction so that they could actually lock in their housing costs for a longer period of time. I mean, after all, they bought a new home, right? Welcome back, and if you're new to this channel, we're glad you found us. I'm Todd Sachs, a Maryland real estate broker who has served the housing market in one way or another since 1989. Wow, that's a long time. Well, anyway, the housing market has all but halted as home buyers are slamming on the brakes. The state of the economy has finally sunk in, I guess. We're still seeing unaffordability in life's essentials. We have less money in our bank accounts. And for many, they're now being laid off from their jobs as our businesses are feeling the pinch as well, as many employers, to prevent layoffs, are now cutting out overtime and bonuses and cutting back hours altogether. And as a result of the unaffordability crisis, many people are now getting part-time jobs just to stay afloat. In the housing market, buyers are giving up on home buying altogether as mortgage rates continue to rise to 25-year highs, and home prices, despite any price drops, are still too expensive with all things considered. Finally, we're now starting to hear what's truly happening in the housing market from local news stations, as I guess that they can only peddle distorted information for so long. And if you've been relying on these mainstream media sources to provide you with all of your information, I believe half of what we hear in the news, and that's being pretty generous at that, is based on incorrect data, especially when we're hearing about a strong U.S. job market and that home prices are continuing to rise. Look, guys, we are in one of the worst affordable times we've seen in decades. Think about it. And some experts say we're headed into a collapse like we haven't seen since the Great Depression, making the great financial crisis just 15 years ago seem like a walk in the park. And many who have been authoring the data we've been shoveled have been providing narratives on lagging and backward-looking data. Who thinks this is a good idea? And some reporting the data, ladies and gentlemen, have agendas and only give part of the information. Just saying. The problem becomes when we believe everything we hear, we're caught off guard when the real facts are eventually told, sometimes too late. And this can cause us to go through costly lessons that may have been prevented had we thought on our own, not trusting everything that we hear in the news, and had we taken our heads out of the sand. Now let's talk about what we're seeing with first-time home buyers who recently bought brand new homes. Many of these new homeowners were not prepared for their monthly housing costs to rise so quickly when they first said, "I do." Well, we've been hearing marry the house and date the rate, right? In other words, when you buy a new home, typically you believe with your fixed mortgage payment, your monthly cost won't rise. Many of these new homeowners are now waking up to the realization that it's not quite so. Now let's talk about how costs can rise when you buy new construction. Many new homes sold today are within a homeowners association. Now, homeowners associations govern the community. The association's responsible for maintaining the integrity of the community, enforcing the community rules, regulations, and restrictions, preventing you from painting your front door bright orange, for example. Now, these homeowner associations also facilitate the management of the community, like grass cutting and snow plowing, for example, in the common areas, maintaining any pools, gyms, clubhouses, walking paths, playgrounds, parking lots, etc. In other words, these HOAs take care of some of the amenities that lures these buyers into the communities in the first place. However, these homeowner association fees are sometimes underestimated by the builders, accidentally, of course, as nobody can possibly control the rising costs of maintaining a community. And when this under budgeting occurs, there's not enough money for the association to care for the community. And guess what happens? You're exactly right. They raise the fees for everyone living in the community. And also, sudden unexpected costs can happen within a community, like a blizzard, for example. And some of these unexpected costs could cause a community to run over budget, and a homeowner can find themselves in a special assessment situation. And this is where a homeowner can be forced to pay a lump sum to cure the budget deficit. Another rising cost that we can see homeowners fall into is when they are lured into things like adjustable rate mortgages or when builders are offering a rate buy down. Many builders are offering rate buy downs to combat today's high mortgage rates. This is also a way for the builder to reduce costs without actually lowering the price of the home, as dropping prices will upset those who recently purchased for a higher price the exact same home just a short time ago. And also, by dropping the price, any of the buyers who locked in at the higher price and their home is still under construction could cause those waiting for their homes to be completed to cancel their contracts altogether. So many of you may be asking now, what is a rate buy down and is it good or bad? Well, let's talk about a 2-1 buy down, for example. So in this situation, the home builder prepays or buys down the existing interest rate for a period of 2 years, sort of like a prepayment on your behalf. And this initially lowers the monthly payment for the buyer for the 2-year period. However, after the 2 years is up, your official interest rate returns and whammo, you're crushed with a higher mortgage payment. Now, the sell here, guys, is that many people will tell you, no big deal, rates are going to drop. Go ahead and refinance it before the 2-year period is up. But what they don't tell you guys is refinancing is not guaranteed and typically would never happen within a 2-year period anyway. Because in order to refinance, you have to come out of pocket with additional costs, like you have to repay for your appraisal fee, you have to pay loan origination fees to the lender, and in some cases, you may have to bring more cash to the table in order to refinance. So before you fall for this kind of lure, make sure that you do your homework. Now, before we get on to the comments and questions, let's take a look at 2 more ways that we're watching these new homeowners get whacked with higher costs. Every single year that you own a home, your homeowner's insurance premium will probably go up. And they blame this on a couple different reasons, but one is they say, well, your replacement value every year goes up with the rising cost of labor and building materials. And now, because of so many weather disasters like hurricanes, floods, tornadoes, hail damage, and now forest fires, we see where insurance companies are actually canceling policies altogether. And some homeowners are looking at rates that are like quadrupling. And actually, guys, I had an insurance agent tell me not that long ago that insurance is great for everything but the cause of the claim. Of course, they're looking for any reason they can to not pay. And then finally, let's not forget about our local government with property taxes. It seems like the government raises assessed tax values annually with few exceptions. And with these increases in assessed value usually results in higher property tax bills. And be sure that you don't try and beat out the government because they'll take your house if you don't pay. My friends, these are just a few of the rising costs that home buyers are now experiencing that they hadn't planned prior to purchasing their home. So when we're hearing and seeing articles like this on Realtor.com titled How Mortgage Rate Buydowns and Builder Incentives Can Make New Construction More Affordable, It's important to consider all the facts that I previously mentioned before you sign a contract. And by the way, when you're buying new construction, the builder's contracts favors the home builders, not you. And in this article, you'll see even with builders offering buy-down incentives, it says many builder incentives are widely advertised on splashy billboards and online to capture the attention of buyers and reel them in. And while builder incentives may be found as price cuts on the actual house, home buyers may more commonly see offers to help reduce costs on the financing front, with builders offering to buy down the interest rate on the home loan or pay some or all of the closing costs. So one caveat to keep in mind, though, is that these deals are typically tied to financing through a builder's preferred lender. Builders often work closely with certain lenders because they want to know that the loan will close without delay once the home is completed. There may be a caveat to these incentives, such as a must close by date that may not be in the buyer's control if the home isn't finished. So be careful, because I think that we are in for a long, rocky road ahead, and I don't see where mortgage interest rates are going to come down anytime soon. Which leads me into our first comment. OMG, we can't lower rates. We have to correct this mess, as painful as that is. My grocery bill is like a mortgage payment. Well, Mary, I agree with you. You know, a lot of people think that J-PAL is going to fold under the political pressure and pivot, reducing interest rates, and that would simply be catastrophic, because the cheap interest rates are really, besides the money printing, what got us into this mess in the first place. For one, dropping mortgage interest rates to like 2.75% for a 30-year fixed rate mortgage just allowed home prices to skyrocket. And that cheap money is just unrealistic. It's not sustainable. And now that the rates are where they should be, home affordability is just completely out of the question. And what really needs to happen is an adjustment to the prices. We don't need disinflation, just making sure that the current inflation doesn't rise more than 2% in the next 12 months. We need deflation. We actually need price reduction, because it's not practical to expect that our wages are going to grow so much that we can all of a sudden wake up one day and afford the necessities of life. And I believe one of the ways that we can actually get prices to come down, deflation, is to keep the interest rates not only where they are, but continue to raise them. You see, I believe that we need to go through a period of financial pain so that we can get things back on track. And hopefully with better leadership overall for our country, but don't hold your breath on that. Now, our next commenter is talking about HOA fees, as I just previously discussed. In Florida, I was foreclosed on by the courts for HOA fees. My mortgage was paid on time. In Florida, the legislators in Tallahassee make it a law. So this is also true in Maryland. I don't know about all the states, but guys, here in Maryland, you can be foreclosed on for not paying your HOA fees as well as your property taxes. So don't think that you can neglect these bills and not lose your home. Personally, if I want to paint my door orange, let my grass grow long while I'm on vacation, or build a fence, for example, in my backyard that isn't approved by the architectural committee, I can. So the next commenter is talking about our video this past Tuesday night where we were talking about buyers just walking away and canceling contracts. You know that sellers are also canceling out on their contracts, not just the buyers. Well, I can tell you that I don't think that there's many reasons that I would recommend for a seller to cancel their contract in today's housing market. Unless that is that the buyer just simply can't perform and is trying to drag it on, and the seller realizes that it's inevitable that they just get out of the deal. But what we were talking about on Tuesday night is that we are seeing record-breaking highs, like more than I've ever seen since being in the real estate industry since 1989. Buyers are just like walking away from deals. There are actually reports out right now that says over 16% of the home buyers in September canceled their contract for one reason or another. And in Atlanta, Georgia, in the same time period, the number of cancellations was almost 25%. Guys, that's 1 in 4 contracts being canceled by the buyers simply walking away. And what I was talking about on Tuesday night is now, buyers are really freaking out. They're getting into these contracts. They're having remorse. They're looking at the monthly mortgage payment now, and they're coming back with everything. They're asking for sellers to make all the repairs, replace things, give them closing help. And if it doesn't happen, they're just simply walking away. And our next 2 comments also pertain to our last Tuesday night podcast, where we were talking about how some states require buyers to actually pay the seller to have some type of study period or contingency period to get home inspections. And we were really talking about Texas contracts specifically, where buyers offer the seller like $150 to $500 to actually have a period of time where they would have home inspections. And if the buyer decided to walk away, the seller would keep that money. Well, we don't have anything like that here in Maryland. We simply say, we'll buy your house, X amount of dollars. We want a home inspection, take the contract or leave it. And really, I would recommend anybody that has those crazy, payouts to sellers just to get an inspection on their house, I would probably stand strong and negotiate against that if I were a buyer in today's market. But our next commenter says that North Carolina calls the inspection time fees a due diligence fee, and it's absolutely non-refundable. Well, what we were talking about in Texas is that contingency fee would be applied to any down payment money required from the buyer should the buyer continue on with the sale after the home inspections. And then finally here, our question is, why not return the holding cost in return for the actual inspection notes? That way you can just keep them for the next potential buyer. And then they go on to say that they may be off since they never owned a home, but just food for thought. And I appreciate your food for thought here, but here is the fact about the inspection reports. A lot of times the sellers don't want the inspection reports, and neither do the seller's agents. And this is a little tip for you guys, you buyer agents out there, or your buyers. Insist that your buyer's agent go ahead and provide the seller's agent with that home inspection report. And here's why. At least in Maryland, and I'm sure this is pretty common in other states as well. I'm not an attorney and don't take this as legal advice. However, here in Maryland, there are certain things that if a listing agent knows, they have to disclose to another buyer. So if the seller decides that they're not going to make the repairs on the inspection report, they have to tell any prospects that these problems exist. And it certainly doesn't put the seller in any type of advantage for having knowledge of this information. The bottom line is, when I'm negotiating for my buyers, I remind the listing agent of the fact that they have to disclose any of these now material facts, and that they should suggest that their seller just move forward with my buyer's request for repairs. All right, there you have it, guys. Thanks so much for watching. If you feel you learned something today, you can let me know that you did by smashing that thumbs up. Also, if you haven't subscribed to our channel, consider doing so now. Hit the alert bell. You'll know every time we upload content just like this. And keep those comments and questions coming. You never know, you might be on next week's Real Estate Q&A. See you next time.
Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.